Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thank you for joining us. So we sit here at the end of 2024 and the stock market as measured by the S&P has had a very good year. It's up over 20% on a year-to-date basis. That comes on the heels of 2023, the S&P being up 26%. So obviously we've had two really good years in the stock market. And so Josh and I have been talking a lot about, we should expect some volatility because while we had a little bit of volatility in 2024, we didn't have a couple of those 5 or 6% corrections that are normal. So maybe we're in the middle of one right now. I guess time will tell. We had obviously a lot of volatility yesterday in the stock market when the Federal Reserve announced their interest rate decision. The Fed cut interest rates by 25 basis points or a quarter of a point, which was widely expected. What caused the volatility was the Fed's acknowledgement, I think, that the economy is doing really well, and so inflation risk is to the upside, meaning inflation is coming back. And so the Fed essentially signaled yesterday that they most likely won't be cutting interest rates very much, if at all, maybe next year. And the market is addicted to low interest rates, and the market was expecting rates to continue to go lower, and the Fed indicated that wasn't going to happen. It's Josh and I will sit here and we don't do this very often and say, we told you so. I mean, when we traveled around this country or went to restaurants or stores, we saw the economic activity that was happening. And we certainly thought that inflation the risk to inflation coming back was a lot higher than it continuing to go down. And that's what's happening. And so the Fed can't keep cutting rates in the face of that. And so that's what markets are reacting to certainly yesterday. But when you look at inflation, not just here in the U.S., when you look at inflation around the world, inflation in most developing economies is coming back to a little bit of an extent. And so the Fed has to react to that as well. So the reality is, the economy is doing well. If the Fed was continuing to cut interest rates, that would mean the economy isn't doing well. And so the fact that the Fed is going to stay on pat with rates is certainly probably a good thing.
Yeah, the great paradox of 2024 was, of course, the market begging for cuts when none of us really wanted cuts, in the sense that cuts meant that we were facing imminent economic decline. And, here we are, inflation risk. Inflation has essentially bottomed, but it's still close to 1% above target, so nowhere near the Fed's target. They've seemingly abandoned that 2% target. And inflation, of course, is no longer transitory. All of us, especially that in our daily lives, encounter services inflation, which is driving inflation to the upside. A lot of the incoming administration's policies seemingly would lead us to conclude that real wage growth is likely to continue significantly above trend, particularly to the extent that they enforce some of the immigration restrictions or even deportations. Wage growth has surprised dramatically to the upside, especially over the last quarter, which portends future services inflation. Producer price inflation, which then leads consumer price inflation, has been higher as well. So again, we see potentially another 2022 style year for bonds going into next year, where yields certainly are pricing to the upside, particularly on the long end of the curve. But we don't know that you should necessarily be too concerned about rising bond yields, because it's, in our view, is just the market repricing for higher expectations of future growth. And so that's ultimately a good thing.
So there's certainly some froth in the stock market. Some of the lowest quality securities are doing the best. It feels a lot like the late 1990s, but we might be in that moment. Some of you will remember when Alan Greenspan, he was the chairman of the Federal Reserve, and he gave that famous speech where he talked about irrational exuberance. That was in 1996. The market didn't sell off till 2000. So, we certainly don't think you should be doing anything crazy with your money because this market could continue to run, especially like Josh said, if the incoming administration gets a lot of the things that they want to accomplish, that could certainly be bullish for the stock market. So as always, if you have questions about your account or your situation, give us a call at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.